Let's complete the 13-2 work together, which is on page 386 of your textbook if you would prefer to read the directions in there. But it says to use the selected payroll information from employee earnings records to calculate the FUTA taxes. Unemployment taxes are owed on the first 7,000 of earnings for each employee, so that is our FUTA tax base. And again, they've gotten this information from the employee earnings record. This they got from the payroll register, and they computed this. So let's make sure that we get this on how they computed even that column. So up until $7,000, the earnings are taxable for unemployment. So that is less than $7,000, so $900 more to get to $7,000. This is already over 7, so they just put 0 because we'll pay no more tax. And when that's the case, I go ahead and just put the 0 over there. And then Virginia is at 4380, and so it's another 2620 to get to 7,000. And then Cary, it's another $150 to get from 6850 to 7,000. So that's how they came up with the earnings to equal the FUTA tax base. So now we have to do this comparison of what earnings are still taxable versus how much we made. So for Nick, we're going to put 762.5, and again, the reason that it's 762.50 is because they still have $900 worth of earnings they could have made to get up to the tax base. So every single dollar they made this period is taxable. And then for Virginia, it's the same case, that they still have $2,600 that's taxable. So since they only made $527, all of it is getting taxed for unemployment. And then for Cary, they only have another $150 that was taxable to get them to the tax base, so only $150 out of that $849 is taxable. And then, because we're going to need both of these numbers, we go ahead and total those columns. So the total earnings for the period is $31.79, and the FUTA earnings is $1439.50. So that's just adding up all the numbers up above and up above. Okay, so then we go to the next step. And that next step has that all filled out for us already. And again, we're going to use both those numbers to compute things. So if it were me in my notes somewhere, I would circle this and circle the first two, Social Security and Medicare, so that I know I use total earnings times 0.062 and times 1.45 to come up with these numbers. So 197.10 for Social Security. Again, that's just taking 3179 times 0.062, and then I take 3179 times 0.0145, and I get $46.10. And then the next thing is that I would circle this 1439, which again is the FUTA earnings, so the number that I use for the two unemployments, and I would draw a line over to here and show that as well. So if I take 1439.50 times 0.008, I get 11.52. And if I take 1439.50 times 0.054, then I would get 77.73. And then I'm going to add all those together, and that's going to give me my debit to payroll taxes expense. So 332.45. 332.45. So again, these are going to all be my credits, the payables, and my debit's going to be the payroll taxes expense. So if I go to the next step, it shows me from the previous step what I had. And I'm going to go ahead and just hit show answer so that we can go a little quicker here. Well, pending. And if I go to that step, we will see that the journal entry, May 15th was the date. We debit payroll taxes expense for the total up above. We put our document number, which is memo, it says it right here, memo 46. And we do the debit for $332.45. And then we do all the credits, Social Security tax, Medicare tax, unemployment, federal, unemployment, state, all payables, all credits, and we just copy them from up here. So again, the only thing I want to highlight is that we need to use the total earnings for the pay period from the payroll register to compute these two just like normal. And this is the employer portion. The employee also is responsible for paying that, the same amounts. And then the FUTA and SUTA, we use the FUTA earnings. Not the total earnings, but FUTA earnings from that schedule we prepared. And the employee does not pay unemployment, so this is only the employer. So in this journal entry, we are putting just the employer's payroll taxes, the 4 that they have to pay. And it doesn't matter if I'm Eli Lilly, if I'm the Colts, who I am, these are the 4 that I'm responsible for paying.